Okay. All right. So we spoke on market fundamentals, and we dived into some economical influence and political um, influence that could put to the effects of the markets. Like today now, there is something coming up in the financial market that with regards to our CPI, and CPI is one of the top most volatile news in the economical calendar of news events. And mostly this event is always a one-sided event news, one-sided move rather, which implies that once markets move to that very side, it is so we call it the cumulative price index. This is it happening by 2:30 today. So 2:30 today, cumulative price index is always a one-sided move. So this is a cumulative price index, which implies that looking at unemployment rate, amount of revenue being spent on the country and economic status of the country, and all of these things comes together regarded. And once they realize that monetary policy and all of those things, if they cut rates, probably okay, if the Feds cut or increase rates, this is where it affects the market the most, especially. So whenever market is going to buy, this is where we're going to know. Whenever it's going to sell, this is where we're going to know. But primarily, this is not the only thing to be considered, but we'll be doing this today. So yesterday we spoke about a lot of things, but now the major thing now is, okay, I haven't considered all of these things. How do we then get to know which of these events? How do we then get to know which of the events that will be favorable? Okay, yeah. So how do we then get to know all of these events? How do we know the strength of currencies, the amount of policies and news events coming up in the future of the market, and all of those things? So I'll be giving to us a couple of some websites. Remember I said we're starting from the scratch now, then we transition as we get to the climax, then to the advanced, then all of this, all of those aspects of. So start with zero, then by in the next 1 month, at maximum 1 month, you should start trading positively in a month's time. So I don't mean, when I mean positively, prerequisites to taking trade. But of course, you might have a couple of errors, but as time goes on, experiences will begin to give you more lessons that I will not be able to offer to you, which is the work of experience. So having done that, so we have what we call. So I would love us to, I don't know, I would like many of us to start reading this material first. Ignore all the materials I sent. Okay, you can't hear me. Can you all hear me now? Because I can hear myself. I'm hearing myself. So I guess if you are not hearing me, your network, that should be your network. So I'm hearing myself, so I guess that should be your network, because I'm using about 3 devices, and your network should be the problem. Okay. So can we all hear me now? Alright. So that's good. So having considered, I would like us to dive into this material first. Let's us ignore any other materials I sent. Like, we'll be taking them one by one actually. But first, let's also how do I say that now? Individually start reading this material on its own. So School of Pipsology, we'll be starting with this. It's a self-explanatory material, but there are some technical aspects we'll have to explain before one can understand. So we'll be considering types of trading, the types of charts, the Japanese candlesticks, then we'll do support, resistance, trend line, and channels. Then all of these things, I don't teach them anymore. Fibonacci, moving average, common chart, and all of these things. All these are indicators. I, in particular, don't promote indicators. Elliott waves theory and all of these things are indicators. Then we start from here. Grade 11, creating your own strategy, trading system, market hours, money management, plan your trade, and trade your plan. So all of these ones are the things I will be considering. So yeah, so we have what we call the types of trading. Congratulations, you've gone through all of this as story. So there are two types of analysis you can take when approaching the forex: fundamental analysis and technical analysis. So basically, this implies to us that we have two basic and two primary types of analysis, which is the fundamental aspect of the analysis and technical analysis, which is this technical analysis and fundamental analysis. So we'll be considering one by one. Now, remember I spoke about fundamental analysis yesterday, but not at length. Fundamental analysis is a way of looking at the market through economical, social, and political influences that affect supply and demand. In other words, you look at whose economy is doing well and whose economy sucks. The idea behind this type of analysis is that whoever economy is doing well, their currency will also be doing well. This is because the better a country economy is, the more trust other countries have in their currency. So I hope you understand when I was now referring to you not trading any other currency that you don't just understand. For example, all this Norwegian currency, NDK, NOK, currencies that you know that they don't have enough monetary value, policy, and economical states to affect or influence their market value. So in other words, you don't want to trade what you don't trust. You trade what you trust and believe in. Something that has better structure, something that has better economical structure, and is highly influenced by economic value and political value as well. So if all of these things are not considered in a currency, it is appeared that you shouldn't trade what you don't know. So going forward, I hope you understand what I now mean by trading what you know and trading what you don't know. So which is a very important one for us to consider. Because there are some people, I think some people are very used to trading DXY. For me, primarily, I don't know why someone would have to go and trade DXY. Because DXY as a particular way is a dollar on its own. Of course, it's tradable, but then the amount of margin you see in DXY, like how will I put it now, spread and margin, all of these things considered together, is a very wide range. So commonly, all I just use DXY for is when I mean DXY, that means DXY means US dollar as a let me show us on let's show the view. So this is DXY, this is dollar index. This is dollar index. So this is the major currency that determines the movement of price in the financial markets. In the likes of any currency paired with dollar will be influenced by this guy. So whatever this guy does, if you are not seeing my screen, I'm very sure it's your network, because I'm using 3 devices, so I'm monitoring the device with one and using one for class. So it's working right here. So please be ensure that network is strong. So this is dollar index. So this move. So when dollar index falls, expect that the likes of Euro USD, AUD USD, NZD USD, and the likes of them, where USD happens to be the quotes in the currency in the pair, For as long as dollar is dropping, you expect that Euro USD and the likes will what? Going up. Why? Because they are the considering factor, they are the major factor. Is the dollar index is the major factor moving most of these currencies. Why? Because it has more economical and social influence than all of this country. Of course, it's a universal currency, so it influences every other currency as a whole. So that being said, so that is when you now hear what I said here. The idea behind okay, social fundamental analysis is a way of looking at the market through economy, one, social, two, political, two. When they mean economy, you refer to as the economic state of the country, monetary policy, revenue share, and all of these things. And when they mean social, it's the likes of social amenities being done in the state, buildings, projects, and all of these things. Then we have political influence, which is such as election, anything that affects or defects the country that has to do with politics. So all of these things affect supply and demand in the market. In other words, you look at the economy is doing well. Whatever economy is doing well, if the economy of a country is doing well, then you expect their currency to be what? Strong. And whichever economy isn't doing well, you expect that country currency is going to be growing so weak. And at that point, you don't want to dive into a currency that you don't know its present state. So you must know the present state of a currency before you dive into it to trade. That is very, very much important. So the idea behind this type of analysis is that whoever is doing well, their currency will also be what's doing well. This is because the better the country's economy is, the more trust other currencies have in that currency. For example, the US dollar has been gaining strength because of the US economy is gaining strength. As the US interest rate keeps increasing, the value of the dollar continues to decrease. You get it? The value of the dollar begins to decrease. Why? Because they are increasing rates. So it begins to drop dollar in value, and that is what we call fundamental analysis. So basically, when we're talking about fundamental analysis, we're talking about effects and influences that affect the financial market outside the chart. Now, this is not a considering factor that is within the chart box, within the four walls of the chart on your system. No, these are factors influencing that very chart you're seeing, which is the economic influence, social and political influence. So you need to get yourself updated every single day before you trade about what is going on in the financial market, what's going on in the economy of the country. Mostly you will hear news on CNN at night every day about how government interest rate was able to cut interest rates and all of those things. So sorry. So the likes of them. So that is major. So before we go into technical, let's do a bit of fundamental analysis. So I'll be writing down, we'll be going through a couple of websites to explain how we can get ourselves updated fundamentally in the market. So now we'll be considering this website first. Consider this number first. This is finviz.com. Finviz.com. I hope we are seeing this. Please communicate with me on the chat box. So you can take those website down. Alright, so finviz.com, basically this is the home screen. This is the home screen of sorry, please hold on. Alright, so sorry for the break. So this is the website to be considered for finviz.com. Finviz.com, yeah. So it's a financial visualization on all financial assets in the market. When I mean all financial assets, crypto, basket, Nasdaq, future trading, and all of these things. So it's your choice to pick whatever information you need on all of this. Basically, it's about fundamental updates. You get it? So this is it here. So we are looking into forex. We are considering forex, or if you want to go into crypto and like, so futures is there. So we are considering forex. So click on it. Then it gives us present fundamental. Remember I said fundamental analysis is not static. It is dynamic. It changes as the economy and social political influences begin to affect the aspect of demand and supply in the market. When I mean demand, price falls and price rises. So something must be causing the falling and the rising of price in the market. So the falling and the rising of price in the market is being influenced by something. So that very factor, that very thing affecting the market in moving is what you need to know. Now, how do we now is another thing for you to know, and another thing for you to be able to analytically juxtapose how it affects the movement of the market. No, now when I want to know price is going to buy from here is a factor. How do I know price is going to sell from here? Is a considerable factor as well. So the whole thing now falls onto how do I know, how do I correlatively connect the fundamental event with the analytical event. When I mean analytical, I mean technical, because fundamental cannot just be considered as a major factor for you to take trade in the markets. No, it is just one of the one probably I would say one out of 1,000 prerequisites to be considered to take trade. I hope I'm getting that right. One of 1,000 prerequisites to be considered before one can take trade is fundamental analysis, which is just to okay, probably just to check when you wake up in the morning, you check your food, check your car, check the oil filter, check every necessary things before you move out of your house. This is what fundamental analysis does. So before you can dive into the market, you want to know the present state of the fundamental influence in the market. So now this tells us the strength. Remember I said we need to know the strength and weakness of each currencies in a pair before we can dive into it. Now this is just a currency. This is a website that gives us the strength. Though I have about 2 websites, I will be showing us both websites. Basically, I have 3 websites that I will be using today. Now, so this is Euro USD. This is GBP USD. As you are seeing them, now you realize that they are being represented by colors. They are being represented in colors. They are being represented in colors, and all of these colors now has different meaning in the market. Now, as at yesterday, all of these things were green. Euro USD was green, GBP USD was as green as this. So the lighter the green, how would I say, the lighter or deeper the green, the colorful the green, the colorful the color of the color, that means the high range of how the market is dropping or rising. Now USD JPY is presently dropping. That is why you see that it is as red as this. This is dropping as well. This is buying. This is buying, but not buying so much as green as this. This is neither buying nor selling. It implies that it is ranging within a particular price circle. Same as GBP USD, same as USD CAD, same as USD CHF is selling. So this implies that all of these currencies are presently doing something. Now when you come down to the screen, you see the strength of each currencies on its own. Now JPY so far is the strongest. That is why you see that USD JPY is selling against JPY. Correlatively, I believe you can interpret it as well. USD JPY so far so good. JPY is the strongest in the lineups here. So that's why you see that USD is selling against JPY. Why? Because JPY as a quote currency is strong, while USD as the base currency is the weakest. So JPY has the power to overrule USD. Why? Because it is stronger in economical strength and USD is weaker in economical strength. So USD has the power to pull down, while Euro JPY has the power to what? Pull up. Do we get it? So they can't be strong at the same time and they can't be weak at the same time. Either of them has to take one of the position. So as this one is weak and this one is strong, remember we said something yesterday. If the base is weak and the quote is strong, what will be our market evaluation? Chat box, please. Drop your answers there. So what will be your evaluation on USD JPY? USD being the base, JPY being the quote. What will be your market evaluation? Good. That's a sell. So that's a very good consideration. So that implies that we understand the concept of basis and quote juxtaposition. So that gives us the basic understanding of how that one works on its own fundamentally. So having done that, so this is what this website does. So please get yourself familiar with this website. So we also have the same another website that does the same work as that. So this is currency strength meter. Just type currency strength meter on Google. Currency strength meter altogether. Currencystrengthmeter.com. Okay, I think I can just copy and paste for everyone. So this is currency strength meter. So I don't really need to go far and wide on this. It's almost the same way the first one worked. That is the same way this also works. So that is that about this. So I believe we understand this. So far JPY is the strongest, the same way as that one, and USD is the weakest next to Euro USD, GBP, CHF, and CAD. So if we are doing USD JPY here, it is the same evaluation this website is also giving to us. So I hope I'm getting this right now. And if you look at it, if you notice something, you realize that these currencies, they are interchanging position within the loop of time. They are interchanging position. Now, Euro was here before, now it is here. CAD was here before, now it is here. So it implies that the basic fundamental influence affecting the market, changing the positions and strength of currencies in the loop of time. So you realize that it is not static, it happens to be dynamic. So you have to be updating yourself from time to time, looking at the current strength of the economy through currency strength meter and finviz.com. So lastly, for fundamental analysis, we'll be looking at Forex Factory, and this is one of the most important websites we need to get accustomed with. It's very, very, very crucial. So this, when I mentioned something yesterday that market has the ability to how would I put it now? Like a market has the ability to okay, that's an advantage. We trade. How would I put it now? Um, Events and occasions can be traded in the market. For example, if the Bank of America president or the Bank of Canada president, like Powell, who happens to be the Bank of America president, if he decided that he wants to, probably he has a press conference on monetary value or anything whatsoever it is that he wants to talk about. So the press conference can as well be regarded as an event. So whatever the result of the press conference gives, it can affect the present state of the market as at that time. Now this is what we call an high volatile event. For example, NFP, non-farm payroll. These are, I think we have three major events that happens. There are more than three, but these are the major events that sporadically move the market in different ways. For example, we have Non-farm payroll every first Friday of the week, every month rather. We have non-farm payroll. We have cumulative price index, which is CPI. We have the first phase of CPI, which and it happened, that was yesterday. Yeah, it happened yesterday. Let me show us. That was around 2:30. The first phase of CPI, we have what we call core PPI. This is core PPI. So then the cumulative price index themselves happens today, which is the cumulative price index, which is happening today by 2:30. So this has the ability to move markets in a very huge amount of pips. Markets can take, naturally, if market is going to move without news, markets could do nothing less than 4 to 1,000, maybe 500 to 1,000 pips in a day, in 24 hours. But news has the ability to cover these pips in a very short amount of time, which implies that if you want to trade this kind of event, you need to be very careful and be analytical with your entries before you can trade them. Why? As because they are very, very delicate and dangerous to trade. They can either send you home or take you abroad. So that is why you need to sharpen your analytical skills before you can dive into this kind of news. So imagine you enter an account. Because I have had series of experience where I trade on $100 with news, and the $100 becomes $500 in less than, I think my first time trading news unknowingly, that was ignorantly. I didn't know there was nothing called news when I started this whole journey. So it was with $100 account. I just refunded the money then. In fact, it was they borrowed money from somebody that knew somebody that gave the money. That was about, I think, about 6 years or 7 years ago. So the decision was the idea was just to trade bit by bit, and I just said, okay, let me quickly scalp. So I think it was a buy I took on gold then. That was when I was still trading, when I started trading as an infant. So I just entered the standard lot size, and before I knew it, something just came. I saw a very big candle that went up, extremely up, and I was seeing $100 to $500. I immediately closed the trade. So I was a bit shocked and surprised what happened. So I didn't I was because I believe that they won't allow me to withdraw the funds. So when I got back to the person that was taking me, then was like, wow, you were lucky. Oh. Now this is what we call beginner luck. So every beginner in forex has what they call luck, that you ignorantly make profits that you did not know. It doesn't happen twice; it happens once. I don't know if anybody has an experience here. Perhaps you've been trading before now. If you have an experience in doing that, can you just drop? Can you let me see your chat box? Drop. Yes, 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 yes. Oh, so there's this thing we have, beginner's luck. So when this luck come, it is best advantage that you don't go doing this over and over again. Why? Because it will never favor you. Like it will never favor you luckily, ignorantly again. You get it? Because one, you are emotionally and psychologically in check. So the fear is there. So it's as if they monitor your state of mind. So that's the way it works. So fundamentally, you must keep yourself in check to know what's going to happen. So 2:30 today, I want us all to keep our eyes on the charts, not to trade. And if you want to trade, no problem. But keep your eyes on the charts and see the way it's going to move. CPI is a one-sided analysis move. So the best thing is, if you want to do it, let's analyze gold and USD and see what's probably going to happen. We see that, okay, I think we should just analyze DXY self instead. Okay, this is Euro USD. So we realize that Euro USD has taken out the all-time low liquidity. This is the lowest low in the market, and Euro USD has done justice in taking out the liquidity. This is the all-time low in the market. Yeah, I believe we're seeing my screen. So this is the all-time low. Price has taken it out. Price has broken out of it. In short, this was the first guy that took it out. But this guy now, the guy that took after this first breakout, this candle here caused what we call an imbalance. An imbalance is what we regard to, don't let me jump process, but I'm just trying to explain something. This is when we get to the ICT form. An imbalance is what we call when market moves and leaves a lot of debt behind, and price will not move without paying back the debt before it continue moving to wherever it's going to. So it's just as if you move from one country to a country. Probably you were in US and you were owing US $3 million. You can't leave that country until you pay that debt. That's the way it works. So that's the way market works. So if market leaves a lot of imbalances without filling them back, there will be what we call market retracement to fill the gap, to fill every imbalance and move back. So if there's going to be a breakout, there should be what we call a potential breakout and not something like this. Look at this now. Markets broke out and just went back. Right in. So this must have been the influence of the news. So whatever fundamental influence we're looking for CPI today, according to me with this analysis now, market has been dropping all time long, and market needs to go back to let's go to our daily day. So this is the all-time high. Okay, it has taken this OB order block session. So let's go to 4 hours. So we expect price, and knowing fully well that CPI is a one-sided event, market has taken out the liquidity here. One thing I want us to know is that market moves, price moves like a roller coaster. It will not move until it goes back to pick up the demand or the supply. Market must move, picking every demand and every supply before it moves. So I expect CPI to buy up to this stage. Are we together? Please, if you are with me, drop number 1 on the chat box. Alright, so do we have any other person? Okay. So I expect CPI to rally price up to this level. Then once CPI finishes its work, then price cannot begin to range in between, while it's probably now CPI must push price to this level. Do we get it? I don't want to explain some things I'm seeing on this line that we might not understand. So I don't want to affect our teaching progress and our teaching steps. So price would get here and probably prepare to fall again. But once it gets here, after the news event, it might take its time to trade inside this box before it can decide whether it's going to break out, or CPI can even decide to break out to break out of this particular zone. Has two decisions. It might hold and might not hold price. So there are considering factors for us to know if any other block can hold price or not. So but I won't teach that now. I'll teach that later when we get there. So when we see an order block, a fair value gap, a breaker block, how the window is going to hold price, there are factors to knowing those things. But I don't want to explain that now because we need to do some things before we get there. So I'm just trying to explain a CPI now. So if CPI rallies up to this place, it can range then fall again, which is it's going to create something that we regard to as a well-known market structure that has been creating. So something like this will occur. I hope we're seeing this now. And remember, this is a long time frame, not a short time frame. This is 4 hours time frame. So we expect price CPI to push price here. So if price is going to come down back, it's going to take a lot of time before price can come and break. Now this was the former liquidity that we have. Whenever you see any low or any high in the market, it is regarded as what? Liquidity. That is when you see people do analysis, you see them put it as something like this. When you see them put something like this on their charts, it implies something like this. So when you see them putting $3 here, so that means they are expecting, look at this point now. This is our liquidity point now. This is the newest low. This is the lowest low as of now. So we expect price to come and take this low as well. But at this point now, there is no imbalance here, unlike this one. There is no imbalance here, unlike this one. But we have what we call the lowest low. So two things are most likely able to happen. Price will buy up to this level, and we decide here the decision whether price is going to hold here or price will break through this zone is left to the market. Get? So if price doesn't hold through, if price holds through, that means price is going to fall below this level. And remember, this is a long time frame. If you look at it right from time, market has been like that in structure. So this is you knowing the major structure of the market before you fall into it. Are we seeing that? Please, are we seeing this? Can you see the structure of our market has been coming? It's been a downtrend, going back to pick the demand, supply, demand and supply. So it goes back to supply price and demand price down. It supplies again, demand, supplies, demand. So now this is a 4-hour time frame. Now this is what we call top-down analysis. So when you do your top-down analysis, it implies that you are doing analysis from the 1-day chart, the 4-hour chart, 1 hour, 2 hours, 30 minutes, 15 minutes. Then from lower time frame, you begin to look for how you can trade as a retail trader to trade and move out of the market within a short period of time. Within a short period of time. So that is that about this. So this is just me trying to explain what CPI is most likely going to do. So let's go back to, so now how do we get to analyze the fundamental events here? Now if you see this, there's a news coming up by 11 o'clock, and we have just few minutes to 11 o'clock. We have 5 minutes to 11 o'clock. So once it is few minutes to the maybe I think 8 minutes at most or 7 minutes, the price starts counting down, and when it finishes counting down, the results will show up here. So this is what we call the actual price, and here we have the forecast price. So the forecasted price is the point where you are getting to expect the market gives you a foresight, something you are looking up to. So which means we are expecting the actual to either give us below or above this market value, these rates. So if the market comes up now, look at as at today around 11:30 a.m. Around 11:30 a.m. we have 3.3 as the actual. This was before the news. This was before the news. This was not there before the news, but this was here before the news, which is our foresight, which is the forecast we are expecting. So they gave us 3.5% of market value, and at the end of the news we had 3.3%, which implies that it is below the rate given to us. It implies that as of this moment, this currency is going to drop. Something in the market will make this currency drop, which is GBP USD. So the same thing coming from euro now. So let's see what happens to euro, and you can read more about the events here. So it's called Eurostat's latest news: change in the total inflation adjusted value of output produced by manufacturer, mines and utilities. So tends to have a relative mild impact because Germany and France, which account for about half of the Eurozone economy, releases earlier production data. So now it is their production data that they want to release now. So the production data being released is what we will now see if it's going to be of positive effects or negative effects. So when I mean positive, I'm not saying it's bad or good, no. I mean, is it going to be of is it going to be on the rising side or the falling side. So whichever way, either rising or falling, we can be favorable in all of this move. Why? Because each of these move, sorry please, so you can be favorable in all of these market so all of these things are so in the next 231 I would like us to patiently wait. So let's go to the charts and let me move to a lower time frame. Let's do 15 minutes. So let's see how news works and how it influences the markets to move. So when we start doing ICT, that is when we now start treating trade entries, how we can take entries in our trade, how we can begin to trade entries. So we have 1 minute left. And most importantly, we need to see the kind of envelope. I will explain this after this news. So it can either affect the market or not. And I think it is not taking any effect in the market. There is no influence here. And that has a reason, and I'll explain that now. Why it is not being influenced by the market. So it came as lesser than the forecasted price. So there is no basic influence in the market. So it's meant to be a drastic drop. So euro is meant to be dropping as of this time, but then the influence, the effect in the market is not so much that it should have been. So now this is the reason why. That's what we call come down to your forest. This is the website, please, forestfactory.com. I want to believe we are still with me. Forestfactory.com. Yeah, so we have what we call effect rate, effect volume of effect. It shows how much this news is going to affect the market. So now we have what we call the high impact news event. We have what we call the medium impact, medium impact news envelope. We have what we call the low impact and the zero impact effect. Now, the white envelope has no influence in the market at all. Any news that comes in white envelope, it has no influence, so you take it out. Any news that comes in yellow, most times they do, but in all scenarios, they mostly don't. So I take it out. So the most influenced and affected news that comes out in any of this envelope implies that it will be affected by the market. So this you want to consider taking it in. So you leave this. So all of these are the types of news update that comes. We have news on growth, housing, inflation, consumer surveys, employment, business surveys, central banks, speeches, bonds, and miscellaneous. All of these news are the type of news that comes up in every country. So each country is here gives us release on all these news. Then you apply your filter, save it. Then going forward, the only news you begin to receive is you begin to see red folders event and orange folders event, because you don't want to be seeing just junks. Oh, what's this? Alright. Alright, so you don't just want to be seeing junks on your chart. So now we are seeing most influenced and affected news updates on our charts. So this is what you want to consider to be seen on your Forex Factory account. So please ensure that you are not showing all the envelopes, because mostly the yellow and the white just comes too much in junks and they don't really influence the market. So today now you are looking at 2:30, 4:30 for news updates that will affect the market. As of today, GBP released their news and interest rate cut. Their rate was lesser than the actual. Now this is the way it works. So we have a forecasted price and a previous price. Now the previous price means the last rate at which this market was trading was at 2.6%. This particular news, which was last month. So this update came out 2.6% last month. That was the actual price that came out last month, was 2.6. Now that 2.6 is what we will be using as our forecast. This now they are giving us a new forecast which is 2.6. Now this new forecast that they are giving us now is what we are now expecting as to base our decision on with the actual. So that's what we now call actual lesser than forecast, is an indication that price will drop. I hope we get that. Actual lesser than forecast, and when the actual price is lesser than the forecasted price, it indicates to us that price is going to what? Price is going to drop. When the actual price here, the forecasted price, when the actual price is greater than forecasted price, is in place that it's going to buy. When actual is greater than, I believe we did greater than and less than. So when actual is greater than forecast, it implies buy, and when actual is lesser than forecast, it implies that it's going to what? Sell, which is drop. So that was what happened. So as of this time in the market, this market in GBP will definitely be selling. But note, there are other considering factors when you want to trade news. So when we get to our area of trading ICT, I pray I remember on how to trade news events, because there are some events that happens, and when some events want to happen, event like CPI, get it? CPI is a one-sided news. So if CPI is going to trade and it's going to go far without returning back again, so it does something. It makes sure that before the news, it goes and fill every imbalances, fair value gap, imbalances, or anything that is meant to be filled up before the news. That is if the rate of Fed rate will influence or be favorable to the market. So if it's going to move sporadically, because whenever CPI moves, it can move for the rate from 230 till the following day without coming down again or going up. So that's the way it majorly works. So if it's going to move like that, they will make sure that they fill every imbalances left behind before they move further to either the moon or before it starts dropping. So that's the way it works. And before one can do that, there's something we call when you're able to see those imbalances, breaker blocks, order blocks, fair value gap, and all of this, if you're able to see them and note them, how can you spot them? Then you'll be able to place your price in it. So mostly the way I trade news with pending order. So I expect price to jump into my order, then it will take my trade to my favor. And if it doesn't, it hits my stop loss. That's fine and good. Do you get it? So that's the way. So mostly when some people say it's going to buy, they will go and enter buy straight. So the little retracement in the news is what will just hit their account, and before we know it, yet the market will still go to their favor. And that is why, because they were not able to understand the concept of filling imbalances and all of this thing before a market can move spontaneously to the moon or to the opposite side. So having said that, I want to believe we understand how Forex Factory works now. So, and most time the actual prices is always coming. Whenever it's lesser, it comes in red. Whenever it's greater, it comes in what? In green. So it comes in green color. So I expect that we work on that too. Prices also. So this that we've done today is, there's also another website, but I wouldn't want us to work on that, but we can also consider it. But it's just one of the junks, but then it can favor. It's important that everyone has what we call seeing what other people's trading bias is before, while considering your own. But I wouldn't want to use that now, so it won't affect our trading. So it's important to, at least when you are trading, when you are seeing something, you can also go to a website where other people are seeing something of the same currency pair. So guys, but I won't release it to us now. Maybe after we finish the first phase of this class, then I will release it to us. But by then I want us to work with our own decision. So having said that, so these are the three major websites that I personally use in trading, and I believe these are the most generally used websites. So the only differences is how to use them and how you monetize them. That's the only difference. If you can use them well, good. So that's why I've taught us now to how to interpret every messages you see on this website and how it works. So on this envelope say we read the details of where the news is coming from and the expectation, or probably, how would I say, maybe it's interest rate, or maybe Fed wants to cut rate or increase rate. This is where you see all of this thing, and you read about it, then that's not about that. So this is all about today's class fundamentally. So we've done a fundamental analysis, and tomorrow, which is Friday, no class tomorrow. So this is just a makeup class for yesterday. So next tomorrow, which is Friday, we'll start with technical analysis. Then we'll consider support and resistance, trend lines, and all of those things before we now go in depth into all the materials I sent to us. So that makes the end of today's class. Thank you all for joining, and I want to believe we've learned something substantial enough to say, okay, today is another day for you. So I want to believe we've learned something. Please, if you've learned something on the chat, please drop. Yeah, Friday by 10 o'clock. Yeah. So if today's class has been very influential for you, so please let me see you on the chat box. I want to believe you've made something new today, you've learned something new, because every day, personally myself, I read something new. That is just one of the materials I send to us that I study. I still study. That's why the fact that I know this thing to an extent, I still study, because there is something you know that someone else does not know, and there is something you don't know that someone else know. And once you see that kind of person, you have to pay for the value. So most of the things I do now and see now, I pay for it. There was, I think about last month, I was just taking an online conversation with a guy from Cyprus, and we're just talking, and another guy from Indian. These guys trade like they are crazy. We see their setups. These guys are crazy. But these ones, they will tell you forex is high risk. We want to make you a billionaire today, but be ready to lose your money. And they can either make you a billionaire or the other way around. Of course, you have to sign papers before they can do that. But then those guys are crazy. So they were teaching me on how they see their stuff and all of those things. Of course, I paid for it, and I think it was about $150 just for us to have a conversation. Yeah, sure. I will upload today's. I have not been recording for yesterday and today because they didn't allow me to, but I just did now. I think the account is fresh, so they didn't allow the like accounts to record. So they just I was able to record today's class, so I'll release it to us. Of course, I will definitely release it to us. Once I upload it, I'll forward the link to everyone, and you get to watch the class. Sure, definitely. Oh, that's good. You've gotten new information on fundamental analysis, so that's a very good one. So as far as can go, and you don't limit your learning process through what I'm teaching alone. You can go far and wide. So when you see something new, pay for it. Okay, this is Mr. Francis. How has my voice changed? Am I sounding like a broke man or a rich man? Well, I get richer every day anyways. Even if it is I get richer by dollars. Hey, my God. Mr. Samson. That's good. Alright, so thank you for the compliment, Mr. Samson. So that will be all for today. I'll be looking forward to having us again on Friday 10 p.m. 10 a.m. rather. Then God being on our side, we'll learn something new as well. From there we see what God can do with us. Like I said, it is not by our power or by our knowledge. It's about what God can help us in doing. So as much as we are giving our time to knowledge, let's also pray that God make it work for us. Like I said yesterday, yesterday or Monday, I said I have been in a space where an account of $300,000 was not able to survive the same hit, and $100,000 account was able to survive it. So that is where the work of God comes in, and the work of your broker as well. So don't go and trade with a broker that will just ruin you. So please, let's work in line with that. Thank you guys, and do have a nice day. So as much as I'm teaching you guys every day, please, backtesting is very important. Backtesting with the information I sell to you guys is very important. So when you go, just go and backtest. From next week, you start trading the $50 account, and I'm not trading based on analytics. I'm not trading based on signals, or I'm not giving anybody a shot. I'm not a promoter of signals. I don't give signals. I can give you one signal now, and your signal is stop loss. Me that gave you the signal, I will still be in the trade, and I will know how to find myself out of it. You get it? So I am not a promoter of signal. I just promote the knowledge. Once I promote the knowledge for you, go and work out yourself on how you can get your signal. Whenever you're in trouble with the signal, you know how to come out of the signals without losing at all. So that's the way it works. So if I give you a signal and you just keep losing back to back, you won't know how to recover from your loss. So you're just eating from somebody that has the knowledge. You're not eating from yourself. So when you lose, you don't know why you lose. If you are feeding on people's signal, you just know you lost because somebody gave you something that made you lose. So what I'm doing now is building us up to be our own signal provider. So the $50 account will start trading from next week Friday, or let me say for every Wednesday, or let's just see what happens on Monday and Tuesday first. If you can cover as much as for you to start, then I will see. Then primarily for me, none of my students is allowed to trade gold. So what you can do is you can deal with Euro USD and GBP USD. If you know what you are doing, these two guys can give you what you are looking for every day. If you know what you are doing, like if you really know what you're doing, because gold is not going to be a good start for you. So when you know forex to a very extreme end, and now you can now say you want to probably start putting your hand into trouble, which is good. So gold is a trouble asset to me, because if I analyze today, you can be very profitable today, and the following day it goes against you. The way it will be going against you, it will be very, 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 very volatile. Why? Because that guy is extremely volatile than every other currencies. So thank you guys for joining today, and have a nice day.